Hello, everyone. Welcome to this Eleos podcast on Life Claims Decoded. This podcast will pull the curtain back on what really happens behind the scenes of life and income protection claims. I'm your host, Kiruba, and joining me is Phil, a claims specialist with over 2 decades of experience navigating the complexities of life and income protection. Every day, thousands of people rely on their protection policies when life throws them a curveball. But what actually happens after you submit a claim? How do insurers make their decisions? What can go right? What can go wrong? And how can we ensure the best possible outcome? This is where we uncover the truth. We'll decode the claims process and give you the insider knowledge that most people never hear about. Phil, before we dive into today's topic, tell our listeners what initially drew you to working on claims, what keeps you passionate about this side of the industry.
So what initially drew me to working in claims? I think I, like many people, fell into the insurance industry. In the mid-90s, I didn't really know what I wanted to do. And I ended up in an income protection claims department. I previously worked in the public sector, so working in the private sector was very different. And there was a team who dealt with the claims. Their work seemed very exciting, very interesting. They were all very passionate about what they did. And I used to go over and talk to them and decided that if I was going to work in insurance, then this was the area that I wanted to work in.
Interesting. And what qualifications are needed for someone to become a claims specialist like yourself?
So there isn't any professional qualifications, but there was a diploma that the CII used to do. I don't think they do it now, called the Life and Disability paper, which I did one of the papers for that. And there's other professional qualifications which are relevant that can be done, but a lot of it is learning on the job actually, and learning about the body and about illness and about medicine and those sorts of disciplines.
Can you talk us through the claims process of income protection and life insurance, and how are they similar, and also how do they differ?
Sure. So I guess they're similar insofar that you're looking to validate that an event has happened and make payment under the policy that the customer has bought. But actually, when you then shine a light on it and look at it in more detail, they're very, very different. Life claims is usually, not always, but usually quite a simple process. You're looking to validate that someone has died. It's quite black and white. And quite often, the evidence that you need is very simple. A death certificate, you obviously need to establish who to pay the money to. That can sometimes be protracted, but again, quite often is straightforward if there's a trust or a beneficiary nomination tool is being used. On the other hand, income protection is a much more subjective assessment because you're trying to establish whether somebody is able to work or not, and if they're not, the reason for that. And so you're looking at function and capacity to work. And to do that, if it's an objective injury or illness, if somebody's had a terrible accident or broken a leg, or it can be quite straightforward. But of course, illness comes in many shapes and forms, and it can be a lot more difficult if somebody is suffering from a mental illness or from chronic fatigue or a pain syndrome or fibromyalgia or a much more subjective condition. So you have to establish what their occupation or what their job is, because until you do that, you can't actually make any assessment as to whether they're able to do that or not. You need to understand the illness and the impact of the illness. You need to look at the treatment that they're having. And then there's another side completely, which is the financial side, because income protection is based upon somebody's income and it protects their income, usually in the year prior to them becoming ill. And so we have to establish what their income is and whether they've actually suffered a loss of income. And so it's only when you've done those three parts of the assessment, understand the occupation, understand what's wrong with somebody and how it prevents them from working, and understand whether they've suffered a loss of income, that you can then actually make a call on whether the definition has been met. So with life policies, when you make the payout, the assessment usually stops there and that's the end of the story. But with income protection, in some ways, once you make payment, it's only the beginning because, of course, unlike a life policy, income protection pays a regular benefit and it can do, until the end of the policy term, which in some cases can be up to retirement age. And so the insurer then has to make an ongoing assessment as to whether somebody remains unable to work, whether they've got better, whether their condition is actually deteriorating. And it's in everybody's interest, so the customer's interest and the insurer's interest, to actually help the customer try and get back to work. So the claims assessor will look to understand what the customer needs to get back to work, what those barriers are, and work with the customer to actually help them get back to work. And that could include bringing in a vocational rehabilitation specialist to work with the customer to understand their barriers and to address those barriers with a bit of a holistic approach, looking at all of the different things that potentially impact their return to work. It doesn't have to be just the actual illness, because somebody might have a physical illness but impacts them psychologically. And then also one has to look at the kind of the support structures that they have and their beliefs about work and other things, and that might actually impact their belief that they can get back to work, or their appetite to return to work, or lots of different things. So income protection is a very, or can be a very complex claims assessment that's ongoing, but also very fascinating from a claims assessor's point of view. And that's what initially, to go back to your very first question, that's what initially drew me into insurance, is that the team that I used to go over and chat to assessed income protection claims. So it was multifaceted and lots of different things that they were looking at, and yeah, very interesting.
Got it. Interesting. So as you mentioned, so some income protection claims are pretty black and white, but there are some that can be left to a bit of interpretation. Like, let's say, mental health condition, or like a certain amount of pain that people might have. How do you assess those type of claims, and how are they different from the rest?
And it's a really good question. I mean, firstly, a claims assessor, the biggest tool that a claims assessor has is the telephone, and actually talking to customers is really important. And I know in this day and age, where we're doing more things digitally, then there is maybe alternative channels, but I still think picking up the telephone to an income protection customer and understanding what it is they do, what it is that prevents them doing that now and going forward, is really important. So the phone's really important, and to talk to a customer to understand what it is, the whole situation that they find themselves in. And then following that, medical evidence, whether that be something from the GP, hospital letters, a consultant report, but medical evidence that actually gives the claims assessor information about a history of the condition that's keeping them off work, the symptomology, the treatment that they're getting, and the prognosis for recovery. So those things are all really important, and we would usually get that through medical evidence. With things like pain conditions and mental health problems and chronic fatigue and the subjective conditions that I mentioned earlier, yeah, it's very difficult, and we're led by medical professionals in the main, whilst I guess applying our own kind of knowledge and the other factors that we pick up when we're assessing a claim, when we're talking to customers, when we're dealing with the information that they send to us. And if that presents any red flags, then we can address those either directly with the customer, or we can go back to a medical professional and maybe ask them something.
How often do you entirely rely on a medical practitioner's assessment of a situation versus you making your own decision?
So I hasten to add, it should always be the claims assessor that makes the decision. So it's the claims assessor's job to go out, to look at the claim that's presented to them, to understand the circumstances, to pull together the relevant information that they need to base the decision on whether the claim is valid or not. With death claims, medical evidence is rarely needed, only sometimes, primarily to investigate whether the application disclosures were correct. But death claims is much more straightforward. Income protection, I would always expect there to be some element of medical evidence. I guess in its simplest format, that might be something as simple as a medical certificate. If someone's suffered a broken bone or something like that, and all the claims assessor needs is something very simple to establish that indeed has occurred, and that they can't work. But in many income protection claims, maybe most income protection claims, then at the very least a GP report is required to understand the situation.
Yeah, okay. So death claims are easier. Broken bones, where the assessment is pretty black and white, is easier. Certain things are a bit harder, if I get it, like, because still you're assessing against can they do the job or not. So
Yeah.
that's fine. But now in life insurance, you also have terminal illness claims where a person has got a year to live. So how are those assessed? Because that requires a medical practitioner, but at the same time, I would presume it's really hard. So no one can say a person has got a year to live. So how do you go about like handling those claims?
Yeah, and they are the most sensitive claims to handle as well, and the most difficult from a claims assessor's point of view. And I'll come to that in a second, actually. But to answer your question directly, we are totally led by the treating medical professionals. So the oncologist, the surgeon, whoever it is that's treating the patient, the customer, we are totally led by them. So where the standard market definition requires a terminal illness that's going to lead to death within 12 months, we will go out to that person. We will ask them for the prognosis. We will ask them about the treatment that they've had, and then we will make an assessment. Sometimes the treatment, they haven't had the full treatment available, so actually it's possible uh, that they may live longer than 12 months. But as you alluded to in your question, saying how long somebody has got to live that far, maybe a year from possible death, is really, really difficult for a medical professional. And they're not insurance people, they're doctors. And I think we put them in a really difficult situation. And so that in turn sometimes leaves us in a difficult situation, because if we feel that actually the prognosis is probably longer than 12 months, that maybe there's treatment options that could reasonably prolong life, and we don't feel that it's right to pay out yet, it's the worst possible conversation, or one of the worst possible conversations that you can have with a customer, to say, look, we know you're terminally ill, we know, that things aren't great for you, but actually you have, the information we've got indicates you've got a little longer than 12 months to live, so we can't pay the claim yet. It's a really difficult situation, and one that customers understandably struggle to get their head around. And it's a definition that's been discussed for years within the industry about whether we could do something better, whether we should shorten the 12 months to 6, whether we should lengthen it, whether we should just pay out on diagnosis of a terminal illness, which one provider now does. So it's a conversation that continues. And I know the FCA, I think, in their market review, have been looking at death claims and terminal illness claims, and also being quite interested in that and the outcomes.
That's a difficult one. You've said the final say is always with the claims assessor, so they decide if a claim can be paid or not. So that opens up to the next question, which is, there is a common misconception in the market that insurers won't pay out. How do you see that?
So I think, firstly, I have to start by saying that protection insurance usually pays out, and maybe we'll get to some percentages and figures later. I don't know, but the vast bulk of claims are paid, and it's really important to note that, because I think when customers understandably don't distinguish between protection insurance and general insurance like home, motor, or travel insurance, and I think a far greater number of claims for home insurance or motor insurance or travel insurance are declined. It's a completely different type of insurance, right? Protection insurance is very different. If you die, you die, and there's should really only be one thing, I think, that stops you getting paid out, and that's whether you've answered the application questions correctly when you took the cover out. Because if you haven't, you run the risk of the claim not being paid, and that's really important. With critical illness claims, again, perhaps not quite so black and white, but the definitions that the customer is given are usually pretty clear and pay out if those definitions are met. I think that there's perhaps a slight problem over customer understanding. Some definitions will, and if I take heart attack, will pay out on the specified severity of heart attack. The specified severity is there to ensure that a heart attack has definitely occurred and it's not anything else. And so therefore, if that severity isn't quite met, an insurer may turn around and say, we're not paying the claim. But usually, where the definition is met, the claim is paid. So I think the biggest problem lies in income protection claims, because, as we were saying earlier, it's a much more subjective assessment, and it's much more difficult to establish usually whether somebody can work or not. And the claims assessor has to pull together all of the information from the different sources, from the doctors and consultants. They have to understand the job that the person does in a way that doctors and consultants probably won't or don't understand the person's job, and they have to make that assessment. The decision should lie with the claims assessor, but they have medical experts that they themselves can refer to, chief medical officers that they can go to, so they can get advice, and they can be, they can take that information as well and be led by that information in making that decision.
Interesting. So you did mention one interesting bit, which is, so when on the medical front, you have people that you can go to understand the condition better. But equally, you said maybe the claims assessor would not understand the job really well. So when you don't have enough information about what is required to do that job for that particular individual, and it could change from individual to individual, how do you collect those information, as to what their day-to-day job is, what it entails, how much effort is needed, if it would have an impact? How do you go about solving those?
So the claims assessors should absolutely understand the job. It's the medical professionals who maybe won't understand the job to the extent the claims assessor does. So, usually the claims assessor will get the information from the customer because that's the obvious person to ask, right? What is your job? What does it entail? How many hours do you work? Is there driving, standing, lifting, bending, that type of thing? If need be, the claims assessor can go to the employer and get a questionnaire completed, or to understand the actual job. They can ask for a job description. If someone's self-employed, then sometimes going online and having a look and seeing whether there's a business website can be helpful as well. So there's a number of sources that the claims assessor can go to. Of course, they can go back to the original, and in fact, it's imperative they do go back to the original application to understand what job was disclosed on the application. Customers might change their job after the application is made, and that's absolutely fine. But again, it's another source of information to kind of pull together into that overall assessment.
Interesting, very interesting. You did mention, so one of the reasons a claim is denied is because of the disclosures, them being not honest or maybe not disclosing it all. So what are the common reasons a claim can get declined?
Yeah, so there's two main reasons a Kiruba that a claim is declined. One is because of misrepresentation or non-disclosure, so where a customer hasn't made accurate disclosures in answer to the application questions, and the other is because the definition they're claiming against hasn't been met. So if we look at those two in respect of death claims, if the definition hasn't been met, it means the person's not died on a life claim, right? So that would in fact be fraud, and everybody always talks about. I don't know if you remember the canoe man who faked his own death when he was in a canoe and disappeared to Panama. Would be that's fraud. The definition wasn't there. He didn't die. But in the context of a critical illness claim or income protection claim, that's very different, of course. Somebody can claim for a heart attack. They might believe they've had a heart attack, but actually it's not been of specified severity. Or they may believe that they have cancer, but it may be low-grade prostate cancer, and maybe it doesn't qualify for a full payout. With income protection, it could be because actually the medical information and the information about the occupation indicates that they should be able to do their job, in which case, obviously, there's a conversation to be had with the customer to really understand why the customer believes that they can't do the occupation or job that they do. With misrepresentation, because for some reason, when the application was completed, it wasn't completed accurately. And therefore, the information that should have been given, had it been given, would have led to a different underwriting outcome. So, in other words, the policy wouldn't have gone on risk because the insurer wouldn't have accepted that risk, or they would have applied different terms. So, they would have applied a higher premium to reflect the risk that person brought to the, or they would have applied an exclusion. And it's more prevalent in income protection claims actually than the other two, possibly because I think if you have some mental health problems or maybe a bit of back pain, in the context of a life policy, that might not be such a big deal. But in the context of an income protection policy that covers you for being absent from work, that's obviously a lot more relevant, right? So an insurer is more likely to act upon that information and perhaps apply different terms for an income protection policy. And it's something that I feel really strongly about because as an industry, we need to address this so we can pay more claims. I'm currently leading a industry project for an organisation called Income Protection Task Force called 7 Claim Stories. There's lots on socials about it, on LinkedIn and on their own website, and it's all around different aspects of claims handling. And the story we've just released is around a misrepresentation. And I think there's more that advisors can do where policies are sold in the advised market. And I think there's more insurers can do to actually try and address the issue of misrepresentation, to try and ensure that we get accurate disclosure from customers, and to ensure that new business journeys don't rely or don't fall down on customer apathy, because we know that many customers won't check their answers once they've been given. You can send an email and ask them to, but many customers won't because they don't think they're ever going to need to claim, because there's always something more interesting or exciting to do, right, than checking your insurance answers. And it doesn't get done. So one thing that I've heard time and time again on claims lines when people call in to make a claim is, never thought this would happen to me. I nearly didn't buy this policy. I was kind of persuaded to, or I really didn't think there was a need for it. And yet these people do need to claim. People do need to claim. And then you find that actually the application wasn't completed correctly, and either the claim can't be paid because cover would never have been offered, or a reduced amount gets paid because different terms would have been applied, and that has then an impact on the sum assured, the benefit that's paid out. And I spoke about the terminal illness claims being amongst the worst. Telling somebody who's just, and in the context of a life claim, telling somebody who's just lost their partner, their husband, wife, whoever, who has lost that income, they might have a young family, they've got a mortgage now that they think is covered, and you have that conversation and say, well, actually, I'm really sorry, but we weren't told this at the application stage, and had we have been, we would have declined the application and not offered your husband or wife cover, and we can't pay the claim. It's devastating. I've got conversations that I've had through my 30-year career that stay with me, where I can hear what it means to people, the emotional response, whether that be people in tears, people angry, people, shouting, whatever. It's an awful, awful conversation to have, and it's where insurance falls down, right? And yeah, I'm really passionate that we as an industry need to address that. Everybody, distributors in the direct space, and all insurers need to look at their new business processes and make sure that they proactively get customers to check their answers and confirm those answers are correct, and maybe continually do so each year when they send annual review statements out, and highlighting the consequences of where misrepresentation occurs.
I would like to understand if the claims decision would be any different for two use cases. One, where me not disclosing a certain information would have led to my application getting declined on day one, which obviously makes sense. So the claim shouldn't be paid for that. Whereas there is another case where I would still have been accepted a cover. I would still have been offered a cover, but albeit at a higher premium.
Yeah.
So what happens when I put a claim a few years down the line? Would my claims be
Right. Okay. So I'm loving that we're drilling down into some detail here, because it's really important people understand. So so you're right. If your application would have been declined at outset, had you made a disclosure which you didn't, then the claim wouldn't be paid unless the piece of information that you didn't provide was innocently missed off. So one of the jobs that we have to do as a claims assessor is categorize the misrepresentation that occurred. We have an ABI code that we follow, and we categorize into one of three categories. So innocent, and if it's deemed to be innocent, that you tried to answer the question as accurately and as honestly as you could, but for some reason the question was missed off, the information was missed off, then we can set that aside and we can still pay your claim, right? So we're happy, Kiruba, that you're an honest chap. We're happy that you've tried your best to answer the question, but for some reason, just this information just didn't get on there. We can pay the claim. If it's careless, then the underwriting decision would have been to decline. Then obviously we're not going to pay your claim, because you wouldn't have got that cover had that information have been provided. And the other category is deliberate or clearly reckless. And unless it's a very small premium rating, anything that falls into that deliberate or clearly reckless category will lead to a claim being declined. So let's say that you non-disclosed that you were a smoker, that you're a 20-a-day smoker, and you told us that you hadn't, you'd never smoked a cigarette in your life or used tobacco products. Important there to remember that it's not just about smoking. Read the question, because the question will ask about other tobacco products. So if most people know whether they've smoked in the last 5 years or used tobacco products, so quite often this gets categorized as deliberate. And if it's deliberate, then that can lead to a claim not being paid, the policy cancelled. However, if it's careless, then actually we could still make a payout, but we would have to make that payout reflecting the correct premium that would have been charged. And we follow legislation that tells us how to do that. So we basically pay a smaller sum assured, taking into account the cover that you would have got for the premium that you've been paying,
the premium you paid?
on the correct rates that would have been applicable, if that makes sense. So if it's careless and you would have got cover, you could still get a payout.
Let's say someone's claim is rejected. What should they do next?
So
let's say my family has taken out a life insurance. Someone passed away. I need to claim on the money. I come and put in a claim. You've rejected it for whatever reason. What are my options?
What are your options? So firstly, seek to understand the reason, because insurers shouldn't reject claims unreasonably. There should always be a very valid reason. So people have to try and understand what that reason is. And if they're not sure whether it's a valid reason, then, and they've spoken to the customer, they can follow a dispute resolution process. that insurer has to follow and has to provide them if they make a complaint or express dissatisfaction. There's a formal complaint process to follow. And if they're still not happy with the outcome of that, they can go to the Financial Ombudsman Service. The insurer will give them rights to go to the Financial Ombudsman Service, and they usually have 6 months to do that from the insurer's final decision. They should absolutely speak to their financial advisor if they have one. And if they don't, then they can obviously still seek advice from other people. And, whether that be a lawyer or Citizens Advice Bureau or other experts actually in the industry like myself, they can seek advice from people like me. So and we can provide, certainly in respect to myself, I can provide an independent opinion on whether actually the claim has been fairly rejected or not. I think just
Okay, interesting.
yeah, I think just adding to that, Kiruba, the most important thing from an insurer's point of view, right, and as somebody who's spent virtually all of my career working for insurance companies, is that to do our job well, obviously we want to pay claims, okay, and we do want to pay claims, and it's very rewarding sometimes when we pay claims, in some really truly awful circumstances. And whilst it's always difficult to reject claims normally, by explaining, it's really important for us to explain why the claim has been rejected in language that the customer understands and to help them see the reason and understand the reason. And yeah, there's also some reward in doing that actually. Even though it's an unfavorable outcome, you can help someone understand why that is. And actually, just one further thing that a customer can do. If the claim is declined due to a medical definition not being met, so let's say it's a critical illness claim, they've had a heart attack and they believe they've been told they've had a heart attack, yet the insurer is saying it doesn't meet their heart attack definition. They could go to the doctor or the consultant. They could take the letter along. They could seek to get an explanation from a medical professional as well to help them understand why the insurer's definition hasn't been met.
Okay, so it's not really a dead end. So they do have options that they can explore if they do feel that they have a case.
Yeah, absolutely. Although I would hasten to add that in most cases the insurer is right, because if they were mostly making wrong decisions, then that would be a huge problem for the industry. They're mostly right. I have to say that in my current role, I provide some technical advice on complaints to a company, and you know, it's still not, I think the decisions being made still aren't as good as they could be. I think there's definitely room for improvement. I think insurers need to invest in their claims teams. They need to make sure people get the correct training, that their claims teams are supported. They're not put under too much pressure. That's really important. One of the things, one of the criticisms of the industry, and rightly so, is that if you get a backlog in new business underwriting, then insurers are happy to throw resource at that and bring in more underwriters because they want to get the business on the books. The criticism historically has been that if you get a backlog in claims, then actually there isn't the same focus, because there isn't the same focus in terms of bringing people in and getting that backlog down, because there isn't the same commercial focus. Yet now with consumer duty and the focus on good customer outcomes, that puts more pressure on insurers, which is a good thing, and an absolutely good thing to help ensure that the focus on claims is there. And that's something that I'm very passionate about.
Interesting, very interesting. So one thing on, again, going back to the misrepresentation or non-disclosures. So how do insurers treat lifestyle factors like smoking, alcohol consumption, or mental health while assessing a claim? Because it's not something that is always available through medical records. People don't honestly disclose how many cigarettes they smoke or how much alcohol they drink. So how do you go about handling those things that are not on medical records?
We rely on customers' honesty. Sometimes these things will be in the medical records, okay? So sometimes, maybe at a new patient screening, a doctor's surgery will ask about, are they a smoker? How much alcohol do they drink? Quite often at any referral, I think a GP might ask those questions. They'll update their records. Occasionally, a customer might come in and they'll be asking about giving up smoking on nicotine patches, or maybe they've come in with a different complaint like chest pain or asthma, or and they will get asked about their smoking habits, their drinking habits. Maybe they will be, and you see it in medical records, given advice to actually cut down the amount they drink. So we're reliant upon those disclosures in the medical records. If there's no disclosures and the customer's not told us anything, then we don't really have anything to go on. The other thing that I haven't mentioned yet, though, it's really important, is that when insurers assess a claim, they can't go fishing for non-disclosure. So the insurer can only ask questions that are relevant to the claim being made. If someone's claiming on a life policy that's 15 years old, and they're 65 years old, and so this is obviously the family claiming, and the policyholder was 65 years old when they passed away. They had disclosed that they were a smoker. They died of a heart attack. Then you wouldn't expect to investigate misrepresentation on that, okay? Because a 65-year-old smoker dying of a heart attack isn't a really unusual occurrence. But if they were 40 years old, they had a clean application, they hadn't disclosed any poor health, they said they were a non-smoker, that they didn't drink alcohol, it was a clean application in that they didn't have any disclosures to make. So should be in relatively good health, don't smoke, and yet they die of, no family history. That's another one we've not mentioned, no family history. Yet they die at age 40 of a heart attack 1 year after taking the policy out. That's where, as a claims assessor, you kind of think, well, that doesn't sound quite right. And although an early claim in itself isn't reason to investigate misrep, in the circumstances I've just explained, it would be reasonable to send a targeted letter or a targeted report to the GP. So we can't ask about anything, but we can ask about their history of smoking. We can ask about their history of chest pain, of heart disease, of things related to the cause of death. And obviously, in a critical illness claim or an income protection claim, you are having to get information to validate the claim about the health condition that's led to the claim. So again, if they're claiming for cancer on a critical illness plan, you need to obviously go to the consultant and or the GP, but usually the consultant, and you need to ask a lot of questions about the diagnosis and when the diagnosis was made and the presenting symptoms and treatment and all of those things. And so within that, you can ask about any related conditions to cancer or symptoms that the customer has had. And obviously, so that's something that insurers can do, but they can't start asking for a cancer claim about history of chest pain or heart related conditions or things like that. It has to be related to the cause of the claim.
So if misrepresentation and non-disclosures are the two main reasons for the claims to be denied, why don't insurers ask for the medical records while purchasing a policy from every single individual? Wouldn't that make it a lot easier? So there would be a guarantee that my claims would always be paid out?
That's another really good question, Kiruba. So I guess there's a few things, right? So firstly, it would keep the NHS very busy having to supply medical records on every single insurance applicant, right? So the NHS, which we know is overworked and struggles to deal with our requests, both in underwriting and at claim stage anyway, would be doing a lot more work. Secondly, our underwriting teams would be triple the size, quadruple the size, to actually go through and work through all of those medical records. So that would lead to higher premiums, right? And yeah, I think, I know one insurer did try getting medical records on each application by submitting subject access requests, and it was something that I think they had to stop doing. So I really get the idea. And wouldn't it be lovely if we could guarantee that once a policy was underwritten, that there was no misrep, right? The only reason the claim wouldn't be declined is if the definition wasn't met. But we shouldn't stop seeking to find the answers to make sure that more claims get paid and that there's less misrepresentation. And there's things that we can do. There is little things that we can do, different types of policy set up. I don't think we should ever stop having that conversation. And of course, there's also different, as you'll know full well, there's different channels that we can sell insurance in, which again have different approaches, which give us different options and different ways of looking at disclosure and the questions that we ask and the questions we need and how we underwrite and all of those things. So yeah, it's there to be explored, and it would be great if the industry can continue doing that. And sometimes I think there needs to be a little bit more collaboration as far as we're able to collaborate across the industry to come up with a solution.
Interesting. That's very interesting. So because as I understand, the claims process is quite manual. So there is always a claims assessor going through all the details to decide on the claim. And is there any part of it that can be automated? So now we have access to the AI tools that can read through big documents, digest it, and give the information we need. So there is also eGPR records that we can have access to now. Do you think that can solve the problem? That could shorten the claims assessment duration?
Possibly, quite possibly. I think AI's got a big part to play in our future across the whole value chain in terms of underwriting and claims. And yeah, they can take medical records, they can summarize them, they can, yeah, absolutely. I think quite potentially there is a solution somewhere in there. I mean, I'm still very much learning all about AI, and I think my attention has been more about how it can help us in assessing the claim, as opposed to that new business journey in terms of the disclosure and the application process. I think, just talking about the assessment of the claim, I think what we can do is we can use AI to pull all of that information together to tell us whether a definition has been met or likely has been met, to recommend in the income protection future management plans, and to flag whether somebody needs early intervention. I think I get quite excited about it in this context, right? Because, and look, it doesn't take over the job of the claims assessor, because the claims assessor is still there. The claims assessor is still there. Their role changes slightly, but I think AI has a big future, and it's already, people are already looking at it and doing things, and I think you'll start to see that quite soon. Some of the well-known names doing stuff around AI. But actually, so to go back to your original point, can AI take away non-disclosure as an issue, meaning that we can just pay claims? I think it can certainly play a large part in that. I haven't thought it through a great deal, but I think AI is just at the beginning of its journey as well, right? Isn't it? People like myself, Ruben, I suspect you're a little bit ahead of me when it comes to things like AI. I think I'm just, it's only in the last 3 months, 6 months that I've been using things like ChatGPT and Copilot, and seeing just a fraction of the possibilities. And I think 2-3 years ago, it was really used, most people weren't really using things like that. I'm not even sure if they were around. So you imagine in 10 years' time where we're going to be, right? In 20 years' time, it's a complete game changer. For everything, right? Not just for the world, for, not just for insurance. So it's exciting. But yeah, I think it can absolutely help us minimize misrepresentation as much as we're able to. I won't say it will completely eradicate it, because I suspect, and particularly where customers want to withhold something, I suspect there will always be an opportunity for them to do so.
Got it. That's very interesting. So, because it's a quite manual process, how long does it take for you to assess a claim on average? Is it the same for both life and income protection?
No, it's a $1 million question, actually. And, I'm tempted to answer it by saying how long's a piece of string, but that's not very helpful. So it all depends, okay? I think where a claim is quite straightforward, where we get responses from medical professionals, doctors, consultants quite quickly, then there's no reason for the claim to be paid quite quickly, right? Reasonably quickly, within weeks, a month. For my last employer, we paid a critical illness claim on the day that it was notified to us, because the customer had some hospital letters that confirmed the diagnosis. All we did was we validated them with the hospital. He emailed them to us. We looked at them. We called the hospital and said, "Look, we've got these letters. Can you confirm that these are a true copy of letters that you've sent to the customer, to your patient?" They came back and said, "Yeah, that's true likeness. That's what we have on our records." Brilliant. There weren't any misrepresentation concerns, and we were able to go back to the customer the same day and say, "We're paying your claim." So that is amazing, right? That's how insurance should work when it works well. But actually, I've had examples where it's taken over a year to pay a claim, where the death is not straightforward. It could be overseas. There could be coroner involvement. There could be a police investigation. I can think of an example where the claim was for a child death on a children's policy, but the parents were implicated in neglect of the child. Until we understood the outcome of the police investigation, we couldn't pay the parents who were the policyholders. We had to understand whether actually the death had been caused by them, because that would potentially change things. Yeah, so there's a whole load of factors that can impede our efforts to pay a claim. But I guess on the flip side, claims teams we should continually strive to pay claims quicker, and to look at ways we can get the information that we need. You were talking about medical records earlier. Customers can access their own medical records now. There's AI which can help us pay claims quicker by summarizing large documents, by making recommendations, as I mentioned a moment ago. So yeah, we should absolutely continue to strive to find solutions to pay claims more quickly, because at the moment it's more and more challenging for the NHS to supply information to us. And so we have to think about that and what the NHS will look like in the future.
Okay. So we can expect to have like instant payouts, not so in the near future.
Yeah, not so in the near future. I think it continues to be a problem in terms of getting some of the information that we need. But yeah, we have to we have to keep a focus on that. And using AI and by looking at various ways that we can get the information we need, but also, of course, looking at policy design, because and this brings me on to another point. Actually, I'm going to slip in here, because it's really important when you're designing policies to have somebody, an experienced claims professional like myself, involved in that product design, because we're the people that live and breathe those policies. Okay, we interact with the customers through those policies, through the terms and conditions, and through the design of the policy. And we see what works, and we see what works well, and what enables us to pay claims quickly, and definitions that are easy to assess against and to measure against. And we also see where policies don't work and where definitions don't work, and things that actually prevent us doing a good job in terms of paying claims and paying them quickly. So, I can think of examples where poor product design leads to poor product design leads to poor customer outcomes. So it only makes sense to bring a claims professional like myself into that product design, to actually understand it from the end user's point of view, and not just the customers, but the claims assessor's point of view, right? And in terms of the things that allow them to do their job well.
Yeah, that's very interesting. As you might be well aware, so the market has severe underprotection issues. So people don't take enough of life insurance protection, or not just enough of, they just don't take out life insurance, income protection, or critical illness when they definitely need it. It's not for all, for a vast majority. So when you said claims has to be involved in product design, I think it goes even beyond that. They have to also be involved in convincing the market it's a product that they must have. And claim stories do play a big role in it. So can you share two such stories where it has had a positive impact and as well as a negative impact for whatever reason it might be that you've come across that has stuck with you?
Okay, so whilst I'm thinking about those stories, I'm going to say you're absolutely right, Kiruba, and it's a message that I'm really trying in my kind of new consultancy role to bring to the market, that as an industry, we talk about what our policies do, what our products do, and rarely about what they've done. We don't talk about the actual real life stories. We don't share that across the industry to potential customers in the advice space. We don't do enough of that. And we're not transparent enough. We don't also talk about the decline claims. In my last role, I would speak to advisors, and I would speak to them about our claims process. And as a claims manager, my kind of philosophy was that I've got nothing to hide whatsoever. Okay, I've got nothing to hide from anyone about any decision that we make, other than obviously confidential customer stuff. But the reasons for making a decision. And so transparency is key to building trust with customers, with potential customers, consumers, and in the advice space with advisors. Because if we're transparent, we can build trust, right? So claims professionals like me can replay those stories. So we should be involved in distribution, and we should be involved in marketing, and leveraging that emotional experience into the marketing of our products, and of course into the product designs I've already mentioned, Kiruba. And so I think for the positive one that springs to mind instantly was a gentleman who bought a critical illness policy. He was a financial advisor who had been diagnosed with Parkinson's disease a year or so after buying the policy, and he was concerned about how he was going to be able to continue his job. He was quite stressed, and it was still fairly early on in his illness journey, I guess. He had some symptoms, but maybe not a full range of the symptoms you might see. And he didn't actually fully meet the critical illness definition that he had bought. But the employer who I was working for updated the definition for him, because so when they updated the critical illness definitions for new business customers, they would also update the definition for existing customers. So a really neat kind of upgrade. And so actually, condition that he had required both tremor and also muscle rigidity, two common symptoms in Parkinson's disease. Whereas the new definition for new business customers only required one of those things, and he only had tremor. So because we were able to assess under both definitions, where that particular insurer allowed existing customers to benefit from those upgrades, we were able to pay the claim. And not only that, we were able to provide him with some value-added services through a neuro-occupational therapy company called Chrysalis that particular insurer worked with, because he was worried about how he was going to continue working and about the symptoms and how they appeared to people. And the neuro OT company were able to work with him, give him some sessions, no charge. It was part of their package to help him face up to the future, And he was a lot more positive after having had those sessions. So that was a really neat thing. He benefited from the upgrade in definition, and he got the free health and wellbeing benefits, if you like, thrown in as well for no extra charge, that was able to help him kind of come to terms with his illness, understand what he needed to address, and to help him face the future with a great deal more positivity. The negative example, maybe I should have done the negative one first. It's a shame to finish on the negative one, but I can think of a customer. So this is a life policy, and it was a lady. She was a nurse by occupation, and she had taken out a policy, and she had died of stomach cancer. And she had actually made some disclosures on the application around some symptoms that she had previously had, which were fine. And the cover had, I can't remember whether she'd had an underwriting rating, she'd paid a higher premium, but the policy had gone on force. However, when she made those disclosures, she was asked some additional underwriting questions, and she hadn't answered all of those questions correctly. And one question in particular, she didn't answer correctly. And had she had answered it correctly, and bear in mind she was a nurse, and the information we got at claim stage showed that she was aware of this. Had she disclosed this correctly, she wouldn't have been offered any cover at all, because the condition that she was asked about was a precursor to stomach cancer. And she was asked to check her answers, and she confirmed to her financial advisor that she had checked them and that they were correct. I don't believe it was deliberate. I believe it was careless. I just believe she didn't really spend the time that she should have done. So at claim stage, when it came to claim and we got the medical information we needed to assess whether the cancer definition had been met, we then understood the history of the illness and the symptoms that had kind of pre-existed the diagnosis and how long they'd pre-existed. And then we saw that she hadn't answered this question correctly. And we went to our underwriters, and our underwriters confirmed, had she have answered that question correctly, we would have declined the application. And therefore the claim, would never have been able to be made in the first place. So I had to call the husband. I had to tell him. He was understandably distraught, really distraught, very emotional. I believe he had a young family. He had a large mortgage, which was now unprotected, probably not one that he could afford to maintain on his own. And the thing I remember about this claim, and the reason why I guess it was the one that I remembered, is because I spoke about the phone calls that stay with you. And I was calling him through my laptop, okay? So it wasn't just a case of putting down the phone. I had to click on a few buttons, and it didn't quite hang up straight away. And I think he obviously thought I'd hung up. And I heard him literally wail after he thought I'd hung up, just being distraught about the situation that this had placed him in. And I felt so bad. Because it's not the news that any person wants to deliver to another human being. Right? The thing that attracts me to this job, and to go back to your very first question, actually, it's a nice segue to bring us full circle. The thing that attracts me about this job is helping people and playing a small part in their journey, whatever that might be, whether it's because they can't work due to back pain, or whether it's because they've been diagnosed with terminal cancer, or because they've lost a loved one. Playing a very small role in their journey, hopefully delivering good news and helping them out financially, and maybe providing some additional support, is really rewarding. When on the few occasions when we can't do that, too many occasions, it's only a small number, but still too many, it's a really difficult job. And the thing that gets us by as claims assessors is by doing that as well as we can and as compassionately as we can, and helping people understand the reason.
That's an emotional one to end it. But anyways, Phil, thanks for joining us today. It's been a pleasure having you on. I know everyone listening to it will have a lot of takeaways from this, but thank you. Thanks again.
Thank you, Kiruba. Thank you for the invite.